What's going on, everybody? It's Giunta with Trend Trading Academy. I'm here to help you trade and get paid. Guys, in today's video, I'm giving you the most amazing entry game that you've ever had, okay? This is going to be the most powerful entry video that you can possibly see. I promise you, this is what I personally do to catch pips in my swing trades. This is what I teach my team. This is the stuff that they are using to make a lot of money and finding precise entry in the market. So guys, you do not want to miss this. Watch this all the way through. Apply this to your own trading strategy, and I promise you, you're going to find amazing reversal entries in the market. Don't forget, guys, like, comment, subscribe. If you want to become a student, go ahead and go to trendtrading.academy. Go ahead and sign up. Become one of our members, one of our students, and I promise you it'll be the best Forex decision you've ever made. Let's get to this video. I'll see you on the charts. All right, guys, so here we go. We're getting ready to get into this video here, and I believe this is going to be one of the most powerful videos that we've actually done so far on the Trade and Get Paid channel. This is actual training from some of our Trend Trading Academy material, and we're just kind of letting you in on it a little bit. So let me give you this strategy, all right? So first of all, we always ask ourselves, when do we get into a trade? How do we know when to trade? So let's take a look at this little chart here, okay? So before entering into a trade, let's ask ourselves, what is the trend? All right, that's the first question you have to ask yourself. What is the trend? If the trend is a ranging market, if we are not in a trend, a bullish or a bearish trend, if we're in a range or a consolidation, just be patient and wait for the breakout. We're not looking to force ourselves into trading because essentially we're not really sure which way the market is going to go until we have indication from price action, okay? So if we're in a ranging market, make sure you're patient and wait for the breakout. If we're in a bullish trend, the next question you have to ask yourself is price at a support level? Is the price action right now, is the candlesticks, is the price at a level of support? If the answer is no, if we're not at a level of support, then we shouldn't be trading, right? We should not try to jump into a trade while it's halfway into its move. Essentially, we think that the highest probability moves in a bullish trend come at levels of support. So we don't want to trade into going up a bullish trend. We don't want to go into an area of resistance or in the middle in between support and resistance. We want to trade away from levels of support. That is the highest probability that we have in the market. So is price at a support level? No, then don't trade. If it is at a support level, then it's time to buy. It's time to start looking for the entry based on price action. We'll get to that next. Are you in a bearish trend? Well, if you're in a bearish trend over here, the same question is asked, only the opposite. Is price at a resistance level? Okay? If it's not, don't trade. If it is, then it's time to sell. If it's not at a resistance level, then it's not time to trade. If it is at a resistance level, then it is time to look for a sell in the market. But we do that based on price action indication. Again, we do not want to trade a sell into a level of support. So if we're not at a resistance level, then we should not be looking to sell at the moment. We wait for it to trade away from resistance. So the next thing once we have that identified, the next thing we're going to look at is entering on a swing trade. Okay, and this is really simple. A bullish swing trade entry, the first candle makes a low. So I'm gonna show you this 3-point entry, this 3-candle entry, and this is how we're gonna break it down. The first candle makes a low. This is the weakening of direction. Generally, we see one of two things happen. Either we see a real big slowdown in comparison to what price has previously been doing, or we see kind of like a last stand for the sellers, and the sellers make one last big push, and we see a real strong sell candle or a bear candle, but it is followed by number 2, the second candle making a lower low, usually a trigger candle. It's a rejection, maybe a pin bar, maybe a doji, some type of a spinner top, tweezers. We see a lot of things happen right here, but what we want to see is a reduction, number 1. In other words, in a bullish swing, we see the bears losing strength, a reduction, a reducing of strength. Number 2, we see a rejection. In other words, it tries to continue going down, but it is rejected at a level of support. Okay? And we get a price action candle that indicates that. Number 3, that third candle, it makes a higher low, and this is your entry candle. This is the indication that it's time to get into a buy. Okay, and what that looks like is it generally goes higher than the previous candle. So the rejection candle, it's not just that it's blue or green, whatever your chart looks like. It's that it literally is higher than the previous candle. So if you have a rejection candle that's higher than your entry candle, right, or your reversal candle, then that's not exactly what we're looking for. And that's not to say that we can't enter on those type of trades. But the one I'm showing you is a beautiful, beautiful setup, okay? Some people call it Morning Star. I'm telling you that this 3-candle entry, okay, reduction, 1, rejection, 2, reversal, 3. The third candle tells us that sellers have gotten weak and that the price is likely to reverse. That's in a bullish swing. In a bearish swing, we're looking at the opposite direction. So the first candle makes a high, and this is the weakening of direction. So again, we have had bullish movement or bullish momentum, and either one of two things happen. Either we start to see major slowdown, in other words, the candles have gotten smaller and smaller, or we see that one final push. We see a big push in the beginning of the bull move. We start to see it slow down, and then we see this one last stand for the buyers. They push the market as hard as they can. It goes up, but it is stopped by that number 2, which is the rejection. Okay, so maybe we start to see a bearish pin bar follow it. Maybe we see an evening star forming. We start to see some type of a candle that is a rejection at a level of resistance after the bulls make their final push. And then that is followed, number 3, by another candle that makes a lower high, and this is your entry candle. So in other words, we have a reduction of strength for the bulls, a rejection of resistance, and a reversal candle that brings you lower than the rejection candle. That third candle tells us that buyers have gotten weak and price will likely reverse. So what we are looking for: reduction, rejection, reversal. Reduction, rejection, reversal. So now let's take a look at what that looks like actually on the chart. All right, so let's take a look at what it looks like on the chart. All right, so exactly what I'm talking about is like something like this. For an example, we see right here, we know we have a level of support right here, okay, at the 179 660 area. So what do? We have bears in the market. We see them slowing down. We have a wick here. We have a doji here, and then we have one last final push right here. Boom. Right? So we see a reduction, rejection, reversal. Let me make that a little bit bigger for you. Reduction, strength is over. Rejection, it tried to push down and could not. Reversal. At that point, we know it's time. Once you see this candle engulf the previous candle, it's time to enter in for a buy. Okay, so let's take a look again. Let's take a look a little bit back here. All right, here's another perfect example. We have bears in the market. We get a slowdown right here. You see strong movement, and then you get a big wick, and then your reduction. Okay, right here. Then you have a rejection. In other words, it tries to push down the wick. You see that big red wick, meaning that price was pushed back up. And then the blue candle here, reversal. Reduction, rejection, reversal. Once that blue candle engulfs the red candle, we get in, and right here we would have entered and caught that beautiful move right here. We would have caught all of that. Okay? Again, we have right here, we have bulls in the market. Here's the opposite side. We have bulls in the market. Here we have one on the opposite side. And here we have a reduction. We have a rejection. And then we have a reversal. It slows down right here. After some good movement up, slows down right here. Has indecision. We have a rejection right here. And then we have a reversal right here. As soon as we see this red engulf the blue, we get in and we could erode that all the way down. Another beautiful setup. Okay, right here we have bulls in the market. Strong movement. Look at this. Big candle. And look at that. We get a nice slowdown. It tries to push up again. We get another rejection and reversal. Reduction, rejection, reversal. Reduction, rejection, reversal. As soon as we see this red engulf the blue, we're in, and we catch a beautiful little sell right there. All right. Guys, this stuff is over and over again. Look right here. We have a nice big bearish move right here. We see a nice reduction. In other words, we have big movement, and you see it slow down to almost come to a stop. Okay. Then we have a rejection. Then we have a reversal. Reduction, rejection, reversal. This is over and over again in the market. Here's another big move right here. Reduction, big bears in the market, and then suddenly nothing. Reduction. Rejection, we see it tried to push down, it didn't have the strength. Reversal. As soon as that blue engulfs the red, we're in, and boom. Caught all of that. You had a pullback here, but no big deal. You caught from here all the way up. You did get a pullback and then pushed all the way back up. Beautiful trade set up there. In fact, look at this one. You could have very easily caught 230 pips off of that one. All right. Very beautiful moves that happen in this type of a market. All right. You know, here's another one. Bears in the market. You got reduction, rejection, reversal. You could have caught that, went all the way up. Happens all the time. Here we come out of a ranging market. And remember I said we wait for a breakout? Look at this. Comes down, reduction, rejection, reversal. Look at that. All the way up. Very nice setups in the market when we see these things happen. All right. So guys, again, I hope this helps. And make sure you check it out. RRR. Reduction, rejection, reversal. Use this at key levels of support and resistance. Make sure you do your price action. You're marking up. Make sure you understand what you're looking at first. And once you do, I'm telling you, if you will use what I showed you in this video and use this to help find your entry points, you're going to have precise, beautiful entries in the market. All right, guys, there you have it. I hope this video helped you. RRR. Just that simple. Reduction, rejection, reversal. That's what we're looking for. If you can get those three candles to play out at a level of support or resistance, you are going to find key entry points to get profitable trades in the Forex market. This is powerful stuff. This is what I do in order to find money and find good profitable trades in the Forex market. All right, guys? So don't forget, like, comment, subscribe. If you want to become a student, remember to go to trendtrading.academy and we will help you. We're going to take you from beginner to advanced. We're going to trade together. We've got an amazing community, and you are going to love it. All right? Trendtrading.academy. I'll see you on the next video.